Good afternoon, everybody. It is Monday, December 7th. Did St. Nicholas come to your house yesterday and fill your stocking up? If not, let's try to fill it up with some stocks. Haha. All right. So let's start at the top. I have my rover list broken up by sector. And these three aren't categorized because these two are ETFs. And this one, I just don't think it's gotten added to basic materials yet, which is where I believe it's going to end up. So let's start with MP materials. Somebody asked me if I was going to change the buy zone. Not really. The orange stayed the same. I stretched the yellow up a little bit, but just because the stock rallies doesn't mean that you should move your buy zone. That kind of defines you as a chaser. RSI through the roof. Money flow, same thing. So no changes there. Barrick Gold and Newmont we covered last week. They both jumped today, almost 50 cents on Barrick, 45 cents on Barrick, and $2 on Newmont. So last week when I was talking them up, that would have been a good week to buy Barrick and to buy GDX. GDX jumped as well today. You can see almost nothing even in the middle of their ranges. Go down to communication services. We have a couple. Been telling you about AT&T that you really need to buy this while it's still under 30. Lumen Technologies pulled back for you today, so I'm going to add to it tomorrow. If you've been following along with Lumen, there's been insider buying. They're incredibly involved with automation. They just completed a note offering, changing 4 to 4.5% from 6.125%. Huge savings in interest. These notes are due 2029 versus these notes were 2053. So a huge savings in interest. If you take a look at Lumen Technologies, was one of the things I've been talking about all year long. You need to read their website. They're doing everything right. And now they're going to have lower interest expense. That's more money to the bottom line. They will eventually sell off the consumer division, become a B2B company for the most part. Mason Hawkins is buying it. He's a big time value investor. And that's a big position for him. 3.66%. Everything you look at, it's data. Don't think of these guys like a telephone company. Stock went down today. I think it probably had something to do with the dividend. People who were shareholders of record as of 27th of November, they're coming up on the distribution date next, or is it this Friday? This Friday. So they're, I think they're probably just selling out the stock, because they get the dividend anyway, because they hold it on the ex-dividend day. And they'll be talking up themselves at some conferences coming up. I recommend that you probably take a look at some of their presentations. They talk about what's really going on with the leverage. It's coming down. Leverage is coming down dramatically. They don't really have to raise the dividend that much in the short term. My guess is they're going to buy back shares. Why would they do that? Because then that's less money going out as dividends. This fiber-based infrastructure is valuable. Maybe they find a way to convert all these people over to the fiber side. So Lumen Technologies, there you go. That is a great formation. Now this makes it really look like it's going to start to break out up and go all the way through here into the teens somewhere. So I think you could probably buy it right now for a pretty quick 30% gain into next year sometime, depending on if and when we get a correction. I don't think you have to wait to buy it. It's near the bottom of our buy zone. It's paying a gigantic dividend. It's at almost no risk, not any more than anyone else. Way less risk than most of the REITs that we talked about last week. So I really think you should be making sure that Lumen is either a 2 or 3% position. You can make it 2% and hold that last percent back just in case it does go down another $1 or $2. But I make it at least a 2% position right now. Let's take a look at AT&T while we're on it. Right. Again, sideways formation. It's what you want. Sideways when things are undervalued. Almost the same chart. This one can break out pretty quick and then get all the way up to here. It's into the 30s, middle to upper 30s pretty quick. It's not a lot of sellers in here. So once this is bought, it can climb that wall. And then up here is where people might sell, because the people that were buying up here might sell if it gets up here. So I think you got a pretty smooth ride into the upper 30s here, and you collect a big fat dividend in the meantime. I still think it's going to get up towards around 60 in the next few years. Somebody posted the negative CNBC article about how certain people at HBO didn't like the way that AT&T was handling Warner Media. I actually think that they're doing it the right way, but it doesn't really matter because that library over at Warner Media is so valuable that if they can't bring it all in-house for a subscription service, then they just go right back to leasing it out, to selling it for rights. So one way or another, AT&T gets a lot of money out of Warner Media from sales, from monetizing it in-house, from selling it. It's just, it doesn't matter which way it wins. It's going to win. It's just a matter of which way works better. And they'll take the biggest dollar amount at some point. I do think that HBO Max, if they set it up just like Netflix, with all of their in-house new content on top of all the Warner Media library, probably can do very well. I think they should probably still lease out television shows though. So we'll see how they do that. But one way or another, they just have to find the right formula, and they'll be great. HBO has rights to so many things that they've already done. The number of prequels and sequels that they can do is off the charts. I would expect that Sopranos series that's coming out to do pretty well, the prequel to Sopranos. So, just wait for HBO when they finally hit their stride. One way or another, it makes AT&T money. If you're a dividend investor and don't own this, I'm not really sure what you're waiting for. Warner Media is more valuable than most of these real estate company portfolios or even the utilities. Why? Because people will pay for entertainment. And then Siri, I don't want this one to get away from us like a lot of other ones have. So make sure you have a starter position. Even if it's just 1%, that's fine. That's where I'm at. And I have orders set at 6 as well. If it breaks through 6 because of some big correction, I can get it in the 5s, well then awesome. If I can get more in the 5s. But I have a starter position in the low 6s. I have another order set at 6, and then I would buy more, under 550 if I got that chance. Yeah, I don't think you're hurting at 4% of AT&T. I mean, if you're already there, I wouldn't go to 4% of almost anything. So if you're not at 4% already, I wouldn't go there. But if you are there, I wouldn't trim either. Kinder Morgan still in the buy zone. Maybe you get a down day to buy it on. But once it gets through here, look at that. It's a lot of room. It could run all the way up to 20 pretty easy before you run into another batch of sellers who got burned. Here's why you want the gas pipelines, but none of the gas stocks. If you think that this is only a discussion in California, which is the 15th or whatever biggest economy in the world, so it matters just on that case. But across the country, East Coast too, the use of natural gas in new construction is going away. And there's even going to be limitations on if you have natural gas in your house already. I would imagine sometime in the next decade, you will get a notice that says, hey, if you have a natural gas connection to your home, we're upgrading all the electric in the community. And once that's done, you'll have like 2 years to get rid of your natural gas. And they'll just disconnect you, right? So when the time comes, sometime in the 2030s would be my guess, natural gas is going to take a big hit on demand. So keep that in mind. If California is already talking about it, and what do we know about California? They generally always lead us. They do things anywhere from 2 to 10 years before the rest of the country, and this is going to happen. So you can say it shouldn't all you want, doesn't matter. It's going to happen. Gas is going to get pressured the same way that coal and oil have. Gas is only getting a little reprieve over the next decade because we need it to get through a transition. So that's why I don't want any of the producers. I only want the pipeline companies. And I don't know that I will keep Kinder Morgan past about $20 a share. But I get to about $20 a share, I might wash my hands of it, knowing that the very long term, even they will get affected by natural gas producers having problems. Although I think the United States is probably going to export natural gas for quite a long time. And I think that the transition away from natural gas is going to take way over a decade and won't start until the next decade. So we're still talking 20, 30 years. The stock market anticipates things like that. And with the millennials, who knows what the millennials are going to be willing to buy. If we take a look at all these energy stocks, they just have this huge rally. And none of them are at their 52-week high yet. And Antero, only because it came down from whatever the heck it was. I don't even know if this is, did they do a reverse split? Or are they just down from 20 when I first looked at it? So, none of these stocks are in good shape. Take a look at Antero. It's 87% off of its 5-year high, right? So it's 13% of its 5-year high. That means it's off by 87%. That's a heck of a drop. The pipelines, though, like I said, they'll hang in there and they can be transitioned to hydrogen, which is what I think is going to happen with a lot of them. I think a lot of them are going to go hydrogen and maybe water. Pulte, yeah, you need this to pull back a little bit. Let's go back 2 years. See this range in here. I think you really need to let it fall through here. Then you start picking up some major support. And probably, this goes way too far back. Oh yeah, so there's that zero line there. That's right where we fell. Probably go a little higher there. Coincides with that line. That one, you can even look there. I really like Pulte. I just think they're going to make a ton of money in the 2020s. I would be shocked if we don't see dramatically expanded new home ownership. I'm trying to figure out where the sellers would be on this. Guess that whole range. There's almost nobody left to sell down here at the end. So they're the bag holders. People that bought, the people that sold there are bag holders, but the people that bought did great. Yeah, this isn't the easiest chart to look at. Right there. It took an event for this to fall off a cliff. And this is probably abnormal up here for that time frame, but a couple of years out, it makes more sense. So how much do you discount for time? It's near an all-time high. This area in here made a lot of sense for a long time. So it's not that it can't get back in here, right? But that's a pretty legit bottom of the buy zone. I think it only needs to go in here to be very worthwhile for us. So somebody asked, why do I think Sirius will be a winner? And their revenue is going to at least double and probably triple. Why? Because Sirius is now going to be in virtually every new car produced. And because it's also available with an app, just like Apple Music and like Spotify, people will say, well, hey, if I have it in my car, I might as well use the app in my house and on my Roku TV and on my other devices. If everybody has an app, and Sirius also has the cars, right? Kind of like Apple. Apple will also be in the cars too. Why would Spotify continue to be a big deal? I'm telling you right now, I've used them all. I've used Apple Music. I've used Sirius. I've used Spotify. I use Pandora, which Sirius now owns, which is why they have an app now. That changes their entire equation for converting people. Spotify basically is redundant. I think Spotify is going to be the big loser here. Could I be wrong? I could be wrong, but I don't think so. And if you haven't used Sirius, then you should and test it out because it's pretty awesome. LiDAR technology, like I said way back in January, is not a big deal. It's not a big deal. LiDAR technology is not a big deal. Everybody has it. It's a commodity. There were so many knockoffs at CES 2020. It was amazing. So now CES 2021 is all online. And I would encourage you to try to view it. And I think they're going to make it cheaper because it's online. It's not going to be $500, $600, $700, $800. I think they're going to have a low-cost entry. So you should look into CES 2021, right? Consumer Technology Association, and see if you can get in because it is awesome. And the things that you'll learn, right? I showed you the 4IR. You know, you've heard Fourth Industrial Revolution from me a lot now, right? Since January. And now you're starting to see it with Ford is talking about it. Delta talks about it. Now you got Lumen Technologies talking about it. It's the reason that PTC went up. You have to wrap your mind around that general concept. What is fourth industrial revolution? And I'll write about it. I just sprinkle it in. There's so much data out there that doesn't make sense. There's so much writing out there about it. It doesn't make sense for me to just regurgitate. Go to the Consumer Technology Association and go to the giant companies that are talking about it. Go to the sources. That's why my articles are pretty heavily linked. Got to go to those primary sources. I can summarize for you, but I'm not going to regurgitate a primary source. I'll give you my opinion, then I'll link you out. Understand what fourth industrial revolution technology is. That's why those manufacturing jobs aren't ever coming back, because they don't exist anymore. Robots can do most of them. Here, this is the tree rings forest for the trees, which I actually have a discount for you now if you want it. And this is like $200 a year. And he does a weekly what's most important. One of the things that he talks about in here is this. Talks about what's coming, which is the exact same thing that I've been talking about for a similar time frame. So how do you want to play this? Look what he says. We want to own assets that benefit from what seems to likely be accelerating global currency debasement, right? So now that doesn't just say the dollar, which is why people overthink the whole dollar thing. Yeah, the dollar is going down, but so is everybody else. And in a crisis, the dollar goes up. And anytime we raise interest rates a quarter point, the dollar goes up. The dollar is the strongest currency out there. Might be the most manipulated, but it's the strongest currency out there. The dollar is the one that always comes back, and everything else is based off of, and will be for the rest of the century. Now, does that mean that we can't trade in a range? No, that's not what it means. But this idea of dollar collapses is frankly, from an economic standpoint, stupid. But look what he says he wants to invest in. Gold, silver, maybe some Bitcoin, stocks in general, but especially industrial and technological. Industrial. What have I been telling you? The industrial stocks that benefit from technology and use it well are going to scream past the ones that are slow to adopt. I told that story on Friday about a restaurant that I went to last Thursday night. They had the great food, but he didn't invest the few $1,000s it took to be able to sell into the delivery and pickup market. He didn't get it. He should have bought a couple iPads. He should have upgraded his website for $1,000 or $1,500. $3,000. Would have cost him $3,000 back in March or April to put himself to be probably the biggest Italian food delivery guy within 5 miles. He would have had a huge radius because of where it's located. And he didn't do it. Well, the same thing applies in industry. Is the companies that are investing right in the new machines, the smart machines, are going to do great. And the companies that don't invest in that, they're going to go flat, then start to turn over, and then they're going to fall off a cliff. And I think that's going to coincide with a lot of old management. So keep that in mind. One thing to understand is that the dollar, because it's manipulated, they're going to try to engineer higher wages. And I think Janet Yellen is going to be pretty good at that. And I think that Jerome Powell is going to be sympathetic to it. I think you're going to see Jerome Powell shift his allegiances to President Biden pretty quickly. The dollar is at this juncture right here. I drew this months and months ago. I said I'd get down to here and then we'll see what it does. If it breaks through here and goes to here, you run into gigantic support again. So this could just be a trade and then it comes back up into here. If for some reason the dollar does worse against other currencies all the way back down to here, it'll be a financial crisis. The only way that this could really happen to get all the way down to here again, which is where it was under George W. Bush, you would have to see the rest of the world just do way better than we do. That's what it comes down to, because this is against a basket of currencies, right? I can't see the rest of the world doing better than America, really, for any significant time frame, especially not in the long term. We have the best economy in the world. It's not going to change in any of our lifetimes. Theoretically, India could do all right, but where does their energy and food come from? Same thing with China. India has a demographic advantage on China, but China has a bureaucratic advantage on India. What do I mean by that? The bureaucratic advantage that China has on India is India still suffers from essentially a caste system, and even though they don't talk about it as much, it still exists in the business world and in the government. China, it's one party, right? They can get a lot more done, even if you hate them, even if they're bad on human rights, they still get things done. Why? There's no opposition. They decide to go in a direction, they're going in that direction. They don't go back and forth every 2 or 4 years. They do a 5-year plan and then they get a 5-year extension because the guy that controls the 5-year plan decides whether or not he wants a 5-year extension. So I want to talk about Palantir here, and you'll notice that they're starting to get a lot of contracts. They're trading at like 30 times sales, which is way too high. Stock price is all the way towards 30 already. To me, it looks like it's going to get down to a little under 20 at some point on a correction. That would knock the price to sales down to under 20 probably. And I think they're going to do very well on the sales side, including on the commercial side. They just got to deal with a huge industrial contractor, military industrial contractor. I think it was Lockheed Martin. They didn't say. Could have been General Dynamics. Might even been Raytheon. But it was a big contract. I mean, there's only like 10 companies in the world in the United States that could have given it to them. So these guys, all the TV shows and movies where the government has these super smart computers, right? Yes, that's what these guys are. These are the computer AIs that are designed for specific purposes within government, and they're ahead of everybody. Now, George Soros has said that he thinks that these guys are shady, and he was a venture capitalist on this side. He invested in these guys before they were public, right? He invested in them way out here before they were public. So he's exiting the stock right now. And that might have been this, right? That might have been that downturn. But he said to the extent that he's allowed to sell, he's selling because he doesn't like management. And that's after having worked with him for a while. And remember, there's 2 things about George Soros you should know, not the right-wing propaganda. One, he's been getting Medal of Freedoms for like 50 years in all the similar things. He donates most of his money to causes that libertarians would love. So if you think you're libertarian, you ought to take a look at what George Soros' history is. And then you should study the ideas that he's written about reflexivity, how things snap from one direction to the other, how the wave bounces off the wall and goes back, because all those things happen over and over again. Palantir, I'm going to put it on the VSL soon, but I think it's just something, just keep an eye on. Start watching them, get to know them, because this might be a $1 trillion company, and we just don't know it yet, okay? This might be a $1 trillion company. Some of the other companies out there, the SPACs, I am going to study the SPACs through the end of the year. And then in January, I'm going to start doing some comprehensive reporting on the SPACs. It's a lot of reading, and it's a lot of AI deep diving. I'm still using a cheaper version of the AI that I had. And some of these SPACs, the IPO run-ups that they're having are pretty obnoxious. And if you just want to take part in IPOs, this is the ETF to do it with. So this is also going to go on the VSL. In fact, I'll follow that right there. It's a way for you to just participate in IPOs in general. And I think there's still a run on IPOs that if it pauses with a correction, that's a buying opportunity. I don't think you want to buy it now. But the thing you should know about IPO waves, when there's huge waves of IPOs, that's generally the private equity and the giant investors cashing out. So 4 out of 5 of these are probably going to be bad deals, but we might be able to find the cherries. Now this wave has been really good since, the crash, but it didn't really do anything for years, right? So there's nothing special about it. It's just had one of those straight up years. So what's normal? Are these 5 years normal, or is this year normal? It's pretty self-evident, right? But on a big pullback, you probably want to look at this one. By the way, where I'm going to buy cryptocurrency is probably Coinbase and Robinhood, but I'm looking at them now. So I don't even remember where I have Bitcoin in here. Here's the easiest way to do it. I have somebody mentioned that I have too many bookmarks, and they're right. So just go to bitcoin.com and study everything you need. Where do you want to buy? You need a wallet. Coinbase is the biggest one. They've also been hacked. So I'm trying to figure out for people that I know that are pretty intimate with this stuff, what are the 2 or 3 best places to get Bitcoin? Robinhood seems like the easiest. It looks like TD Ameritrade and Fidelity are adding it. PayPal, Square. And there's not going to be a shortage of places that you can get Bitcoin, but it depends on where you get the least amount of haircut and where it's safest. And I will tell you, the one thing about Bitcoin wallets is you better not lose your information. These are things that you better write down on paper and pencil. All right, I'll call it a night. I'm going to go finish my file. But there's not a lot out there to buy. But I would get a starter position in Siri. If you're a dividend investor, I think you need to have Lumen Technologies. I think that all investors should have Barrick Gold. If you're a dividend investor, you should have Kinder Morgan. And I think there's an argument to be made that everybody should have AT&T because it'll pump dividends even into a younger person's account that you can use to buy, companies like Siri. But for sure, dividend investors should have AT&T. I guess if you're a smaller investor, you're in that 10 to 12 stock range, probably not AT&T. But if you're getting to the point where you're closer to 20 stocks and you just want some core holdings that will pump income into your portfolio that you can use to buy other things, AT&T would be one of them. Be one of the only ones, actually. All right. Have a good night.